Welcome back, Strongman Personal Finance. Shopify stonk went down. They just released earnings, and it's not good. It is nasty out there in the Shopify world. So Shopify, the e-commerce company in Canada and around the world, is down almost 19% after releasing earnings. What an absolute catastrophe. Now, if we see the stock performance, what do you see here? I see a clown stock. Why? Because right before the clown market, it was chugging along. It was doing okay. And then it went up massively. And then it crashed. And all the retail geniuses that thought they could buy Shopify and 10X were sadly mistaken. And now Shopify is kind of coming home to roost. So the question is why? Why did Shopify drop 19%? Should I buy the dip? You should buy the VT dip. But before we get into that, I just wanted to make fun of Tanner. I'm a financial advisor. Wow! Hey, but my course, bro. So Tanner of Future Investing, I've mocked this guy before, but I just want to remind you that on April 13th, 2021, he released a video saying Shopify stock analysis, 7.5% return, 7.5x return by 2025. But he put a question mark in there, so he's covered, right? So if we go back to April 13th, 2021, April 13th, the stock was roughly $120, and now it's been cut in half. But oh no, it's got a couple months to still 7.5x from that point, right? Now, why am I picking on this guy? Well, once again, typical YouTube grifter. He has a course called Finding the Next 10X Stock. And if you're going to release a course that says, I'm going to find the 10X stock, you better not have calls like Shopify. Okay, if you can actually find 10X stocks and you do it consistently, I mean, I probably wouldn't give you as much crap. But when you listen to clowns like this and you give them your money, you're going to get wrecked, okay? Anyway, so let's look at Shopify. So we'll go over the basic financials. So like I said, it's an e-commerce platform. I think it started in Canada, but it's basically spread around the world. It's a great way, like if you want to sell your little trinkets or have like an online store, it's a great place for a merchant to go and basically build an online store. And Shopify helps you, facilitate running your business. So it's a very convenient, good platform. And you can see that the revenue has exploded over time. I mean, the year-over-year growth has been pretty astonishing. It's starting to contract, however. Look at 2014, 2015, 2016. Massive year-over-year growth rates. But we see it's collapsed pretty significantly. It's still growing pretty healthily. But the growth rates are slowing down because it's becoming a more mature company. And the most recent year-over-year growth rate before this earnings was 23%. And I believe their projections for next quarter is 19%. So growth is slowing down. Okay? This is not a 20,000x growth stock. They're starting to mature slowly but surely. But so far, they've had pretty impressive growth. Their gross margin over time has been it's a pretty high gross margin. This is their profit on basically a gross profit is the profit you make after selling an item, excluding other expenses, selling, general, administrative, interest, taxes, stuff like that. So their gross profit has basically stayed steady in the high 40s, low 50s. Their operating margin, which is their profit before interest and taxes, finally became profitable. Okay. I mean, they had a little bit of profitability, it looks like, during the clown market. But this has been a mostly money-losing company since inception. I mean, it's been losing money like crazy. And only recently have they turned to profitability. Free cash flow, slightly different story. Okay. They basically started becoming free cash flow positive roughly in early 2019. So they've maintained positive free cash flow. So you have low profitability on the accounting basis, and you have profitability on the free cash flow basis. What does that tell me? There's some kind of non-cash expense there, probably stock-based compensation. Okay. Let's see. We'll go to the cash flow. Stock-based compensation. There it is right there. Okay. Stock-based compensation. When a company awards stock to an employee, there's a cost And accounting requires that you recognize that cost. So basically how it works is stock options vest. There's a certain period where you have to basically earn the options. And they have this whole model. It's a complicated model. I've never done this myself. But they have a model to basically value the stock option. And once they do that, then they expense the cost or the value of the stock option over the vesting period where the employee is earning the stock option. Okay. So when you see stock-based compensation, it's a non-cash expense. It affects the income statement on the accrual basis of accounting, but it doesn't affect cash flow yet. But in the long run, it does affect cash flow because what companies do is they give out stock to employees and they have to take some of their free cash flow and buy back stock. That is a true cost because they're giving out stock to an employee. A bunch of employees are diluting you, and then they got to buy it back or you're just going to be diluted. And that cash, instead of, going out and being reinvested into the company or dividend or whatever, is simply used to buy back stock options that were given to employees. So there is a real cash cost to stock options. You just don't see it on the front end. So companies, they can, look at our cash flow. Yeah. But it's going to cost you. Don't worry. So now that that's said, let's go ahead and jump into the earnings. I'm yearning for these earnings. Are we still sharing here? Okay, we're still sharing. Revenue is up 23% and up 29% adjusting for the sale of our logistics business. Gross profit up 33% and free cash flow margin doubled year over year. So they still have decent revenue growth. Okay, it's basically consistent with the last couple of quarters. Year over year revenue is up 23%. Free cash flow margin doubled. Okay, so they're generating more free cash flow. That's freaking wonderful. You're seeing the strongest version of Shopify in our history. Our outstanding Q1 performance is clear proof of our dedication to the new shape of Shopify. Okay, so then they go through some metrics here. Gross merchandise volume. It's the value of all the merchandise that is being transacted on the website. Increased 23%. Revenue increased 23%. Merchant solutions increased 20%. Blah, 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 blah. Now, subscriptions revenue. So apparently they offer like subscription plans. That's got some pretty healthy growth. And that's actually their highest. I mean, we'll double check this, but I believe that is their highest margin segment. So it's actually kind of encouraging to see their subscription revenue grow 34% because that's where they generate a lot of gross profit, as you'll see in a second. Okay. And that's why their gross profit increased. It was probably a big reason because of subscription solutions revenue. Outlook 2024 outlook. For the second quarter of 2024, we expect revenue to grow at high teens percentage rate on a year-over-year basis. Which translates into a year-over-year growth rate in the low to mid-20s when adjusting for the impact from the sale of our logistics business. Okay, so apparently the market was expecting higher growth. They want my revenue to go up higher. And that's probably why the stock tanked, okay? It's all about revenue by revenue with these unprofitable, barely profitable, diluting companies. Gross margin for Q2 is expected to decrease by approximately 50 basis points. Okay, margins are going down a little bit, but it's like 0.5%, basically. Okay, free cash flow margin is to be similar. So they're still maintaining pretty good, or they're projecting to maintain pretty good free cash flow margin. So they're still generating positive cash flow overall at the expense of future cash flow to buy back stock, because they're paying their employees with stock. Okay, let's go ahead and look at some profit margins here. So here's their consolidated statements of operations. They disaggregate revenue between subscription solutions and merchant solutions. Look at the cost of revenues for subscription solutions and merchant solutions. So subscription revenues for the first quarter of 2024 was $511 million US dollars. And the cost of that, the direct allocable cost of that subscription services, probably like servers or something, whatever they freaking do, whatever their costs are that they allocate to that, were only $95 million. So their margin on subscription solutions is 511 minus 95 divided by 511. 81% gross profit from subscription solutions. Insanely profitable. Okay. Now, the total gross profit was what, 416 from subscription solutions? Their total gross profit was 957. So 43.5% of their gross profit came from subscription solutions, even though it's roughly what percentage of total revenue? 27%. So it generates 27% of revenue, but 43.5% of the gross profit. So subscription solutions sounds like it's a pretty big money maker for Shopify. The merchant solutions gross profit is 40%. So still pretty good, but it's half of the gross profit margin of subscription solutions. Just so you're aware, okay? So that's pretty encouraging. You know, subscription solutions is where it's at, apparently. Let's look at some operating expenses. So sales and marketing, they had a pretty significant increase in sales and marketing. I guess who knows why? They're desperate. They cut R&D by a pretty significant amount from $458 million to $335 million. General and admin was flat, and transaction and loan losses is up a little bit. Interesting. Overall, they had income from operations, but then they had this other expense, and they generated a net loss. So what is this other expense? Well, Shopify has investments in other companies. And when those investments fluctuate or they generate losses, that shows up on Shopify's balance sheet or income statement, excuse me. It's on the balance sheet as well. But those losses show up. So you're going to see a net loss here because companies that Shopify is invested in, that they have partial ownership of, have recorded losses. That's this other expense right here. So their operating profit was positive, but you see big losses overall because of the investments that they made. Hopefully those pay off. Let's look at the share count. So it doesn't seem like it's crazy dilution. Let's see how many diluted shares. Oh, it actually went down a little bit. Interesting. That's the diluted. The actual shares outstanding went up less than 1%. So far, they're not diluting like crazy. Let's look at their balance sheet. So they got total current assets of $6.4 billion and total current liabilities of $902 million. So that's pretty encouraging. They have a lot of money in cash and marketable securities. That's treasuries, whatever. So their current asset to current liability ratio is pretty good. Long-term assets. Look at their long-term assets. What do you notice? There's not much property, plant, equipment. There's not much leases. Intangible assets is almost nothing. Deferred tax assets, that's basically insignificant. That's future tax savings that they think they're going to get. Equity and other investments, $3.2 billion. So whatever they invested in, okay, you can see it went down too because of losses. What's the difference there? Let's see. 3579 minus 329. So they wrote down their investments, the equity and other investments, by $303 million. And then they have another line here for equity method investment. There's different ways to account for different types of investments, but they all affect the income statement and the balance sheet. So they recorded pretty, like, not crazy losses, but they're definitely recording losses on their equity investments. And that's why you see this go down here. From here to here, from right to left, it goes down. That hits the income statement. That's why you see that loss, okay? But overall, it's a very, like, asset-light business model. I mean, they basically have a ton of cash and then a bunch of money they piled into these investments. But overall, it's very, very asset-like. It's a very light balance sheet. And I don't see any huge red flags. Yeah, I don't see any huge red flags for their balance sheet. I mean, they have these convertible senior notes of $906 million, but I mean, they're generating pretty decent cash flow, it looks like. So I wouldn't be that worried about it. So overall, pretty solid balance sheet. And a statement of cash flows. So even though they had a loss on the income statement, they more than doubled their operating cash flow. How did that happen? Well, like I said, the accounting profits and cash profits are two different things. We can see that they start with their net loss. So they had a loss on their income statement of $273, but then they add back net loss on equity and other investments. They added it back because it's a non-cash loss. Basically, they made an investment. Either that underlying investment lost money or the share price fluctuated, however they're accounting for it, and they took the loss on the income statement, but there was no cash loss. No cash loss whatsoever. So they added that back, and you can see that overall they have a pretty significant increase in operating cash flow. So that's good. Okay. Let's see. They're not really buying that much property, plant, and equipment, $6 million. They're barely spending anything on assets, like long-term assets. And that's not necessarily a bad thing. Let's see. Purchases of market. Okay. So basically most of their cash is just sitting in like treasuries and bonds and money markets and stuff like that. Okay. Purchases and originations of loans. Okay, so apparently they give out little loans, I guess, to their merchants. That's cute. And on the financing, they're really not taking out any debt. They're really not doing issuing shares. A little bit of dilution. We can see proceeds from the exercise of stock options, but it's almost nothing. So, I mean, overall, like, very solid balance sheet. Statement of cash flows is solid. The income statement is showing losses because of the equity method of accounting. So their underlying investments are losing money. But overall, I mean, like, I'm not worried about this company like going to zero anytime soon. And they're still showing impressive growth. I mean, I guess the market just didn't like their growth rate. I don't know. Okay. And then like, what's the valuation of this thing? What's the valuation, bro? Price of sales of 10. Price of free cash flow of 76. Okay. Price operating cash flow of 74. So you're paying a premium, but if the cash flow, I guess, keeps growing, I don't know, maybe it'll work out for you. Okay. But you're basically paying $76 now for $1 of trailing free cash flow. So you better hope that grows a lot, because if you pay $76 and it doesn't really grow that much, and you get $1 forever into the future, it's not a good return. So overall, like, pretty interesting. I've never actually looked at the financials of Shopify, but I mean, this is not a clown stock, but they are still unprofitable in, at least from a GAAP perspective, because of their underlying investments. So I hope that pans out for Shopify. Let's see. Shopify, my Opify. Am I buying this? No, I'm buying VT. Bacon House summer break. Who goes on summer break? Shopify is the next amp. I don't know about that one. You should have pressed him more when you debated him. He says he knows how to read financial statements and analyze stocks. Guy can't hold a candle to 5. Probably doesn't even know accounting equation. Assets minus liabilities divided by the square root of equity equals revenue. There you go. That's the accounting equation. I own Shop through VT. Is there a Shop-free version? There's like direct indexing. Don't do that garbage. Oh, before we continue with comments, buy my book, bro. See, Tanner, you know how much Tanner wants from you? See, this dork right here that said Shopify was going to 7.5x. He wants you to pay him $340 to learn how to 10x, and he has SoFi there. And SoFi's been getting clapped. This is like $13 on Amazon. And it just talks about, what do we talk about in my book? Changing your mindset. How to manage your cash. Insurance. Investing in stocks. Oh, and here's some things I tell you to not invest in. Bitcoin, gold, options, and penny stocks. Oh, I talk about IRAs, 401ks, and 529s. Oh, I talk about kids' savings plans, credit cards, how financial advisors are scumbags, military, exercising, and eating healthy. Wow. Stop being a broke loser on Amazon. Buy my book. Oh, but you're a grifter, just like everybody else, strong man. Bah, 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 bah. Shut your freaking mouth, you scum. You made me sick. Oops, I didn't mean to be sharing that. That probably reduced the impact. Stop being a broke loser. Buy my book. It's on Amazon. Glad I put my money in Starbucks. I mean, like, Shopify is pretty solid balance sheet. Like, I don't hate that balance sheet. I don't hate that statement of cash flows. I don't even really hate that income statement. I mean, it's mostly non-cash. Hopefully, I mean, if those investments turn positive, their income statement is going to look really good. And they are highly profitable on their subscription services. And that grew like 34%. So I don't know. But I'm not an analyst of this company. You think I give a crap about Shopify? One reason for the mega pump is only growth stock in the whole country. Yeah. Canada, bro. Shopify CEO says employees should not have side hustles. We must be wages. Yeah. If my company said quit YouTube, I'd be like, you can kiss my, you know what, I'm leaving. I am never abandoning my side hustles. Because then you're a wagey. Is there a schedule of yours? There's no schedule. It's like when I can do it. I'm busy, dude. If I have time, I'm doing a live stream. Will Shop become the next AI by hot guy? Yes, AI is the future, and Shopify is the vanguard of AI. I think FASB should change GAAP rules because Lord Bubbleson said SBC is. I'll never get over Joseph Carlson lecturing a bunch of CPAs and the accounting, Financial Accounting Standards Board or whatever. He's such a freaking dork. He hasn't found his. Just give him time, bro. Give him time. How about a 1 to 10x? Exactly. Buy X stock at X price. Load the boat, but of course not financial advice. But of course, bro. Load the boat on VT. Not financial advice. Hey, Strongman, can you go over the app loving numbers? They reported earnings tonight. It looks really strong, but nice to have your expertise. Well, you got to pay me $50 for that, big boy. You can Venmo me or whatever. It'll be in the pinned comment. I do sponsored videos, but it's going to cost you $50. And I do not give price targets. I do not predict anything. I look at the financial statements of a company. That's what I do. Okay. If you want to understand the financials, I'll do it for $50. I'll do a video on anything. Doesn't matter. But if you want me to look at a stunk, I'm not going to give you a prediction. Oh, it's good to next, bro. I'll just look at the financial statements and kind of just talk through it. Shawman is the go to financials. Wish he had a core. I do have a core. It's just a couple of long videos. I think it's in my description, but I don't really shill it that much. I mean, I don't know. It's kind of just a dirty area, but I do have a course. It's a video on the balance sheet, super long video on the balance sheet, super long video on taxes, super long video on the income statement, stuff like that. If you want to inquire, email me. You'll 20,000x your money if you buy my course. Tesla has a 400 price to free cash. Well, Tesla's just a joke. Tesla's Shopify's yeah. Never trust a clear man named after a job. I just opened a Robinhood account so I can trade overnight. Good for you. You're gonna be rich now. I'm so glad. Did you get that match? Can't wait to trade Stressla at 1 a.m. Stressla. That's pretty good. I like that. Buy Tesla Y. So guys, okay, Kid Freshie, if you're watching, you're gonna be very mad. Please don't text my phone. Please. I bought 1 share of Tesla Y on Robinhood. And we're actually going to track the performance of my 1 share. Everybody listen, 1 share of Tesla Y. We're going to track the performance of that and see how it goes. Because apparently it's free money. It's passive income, bro. So I want to see how much money I can make from 1 share of Tesla Y. So that's that. Stay tuned. Thank you, option C asterisk for $2. I can't see the super. It just says super sticker. You should do a stunk and yeah, that's a grift. I'm not doing that. He turned rogue. 1 share, you're gonna be rich, bro. Oh my God, you're become a trillionaire through that 1 Tesla Y. I'm already down overall. I actually got my first dividend payment. Well, I'll cover it in the video. Oh, I got to make a video on this. Okay. I'll probably do that tonight. We'll see. What do you think about Buffett holding so much cash? I mean, I let old Buffy do what Buffy's got to do, Don't buy Strongman's book. Don't buy this book. He's grifting. The Intelligent Investor is free at the library. Report him to the SEC. However, you cannot own it. If you want a book at home that you can, let's say you're stressed and you're like, oh my God. I got a picture of me as a baby in here. Let me hide that. You don't want to see me as a baby. But what was I saying? You can't. You gotta buy the book to own it. Like if you get a book from the library, you gotta turn it back in. It's due in like 2 weeks. It's a pain in the butt. You like rush and read the book. But if you buy Stop Being a Broke Loser, you can own this forever. And it's written by me. That's me. You see this? Who is that? Christopher Bell is a certified public accountant working for the federal government. I need to update that. That's false. He's a liar, bro. He doesn't work for the government. He loves getting yoked, running, spending time with his wife, and making YouTube videos about personal finance. That's me. That's right. Don't you want to own this, bro? It's actually funny. Like I stopped shilling my book and I got no sales. And now I've got 2 sales of my book. I made $10. You will get 60, 70. No, it's actually 69, 420. Not joking. Tesla Y, heading to the gym. Good for you, boy. Stay healthy. Are you bored talking about Jeremy? I honestly haven't been tracking him. I'm just kind of like bored of him. If he starts saying stupid, well, I'm sure he's saying stupid stuff, but nobody's like, people need to like cue me in because I'm not going to watch him. His information is so worthless. Can you start doing earnings previews the day of the earnings? If you do that live, be great. You'll get your sub. Nobody does that. And earnings preview. Well, I mean, what? A preview is like just guessing what earnings are going to be. I don't know what the earnings of these companies. You think I can track this stuff? I'll just look at the financial statements. I don't track this garbage. If you bought Stressla, you did well. If you still own it, you may be dumb. I agree with both of those statements. Certified CPA accountant, that's right. Will you debate Echoes? Yes, if he gives me $100. Just like everybody else. All right, well, that's Shopify. I don't hate the company. I don't hate the financial statements, but it's all about how much you pay for it. Buy my book. Talk to you later. Cheers.